My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people don't make friends. I'm just trying to make a little money. My job is not to entertain, but to explain. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. We're in a weird moment where stocks could be hostage to the Fed and inflation, but maybe they'll be freed by the stealth forces of technology. We're worried about it. Inflation, no doubt about it. But we're hopeful about how artificial intelligence can bring all costs down. We don't like housing prices staying stubbornly high. But we see how Amazon can bring down the prices of drugs and groceries. That's how I've come to view this market during a week where we get the producer price index, tomorrow's game, and the CPI on Wednesday. Today, we're pretty sedate, though. Dow dipping 81 points, S&P declining 0.02%, NASDAQ advancing 0.29%. We did break the Dow's 8-day winning streak, though. The last down day was April 30th, and that's pretty darn amazing. Of course, we don't want to look at this moment as a dichotomy. We want so much to say, sure, the drug prices have come down, haven't come down all that much, but have you looked at BioHive 2? A new AI supercomputer powered by NVIDIA hardware to speed the work of scientists in healthcare, which was introduced today. Have you seen what Recursion, the NVIDIA-backed drug developer that we had on Friday, is going to do with it? Maybe they can use this machine to speed up discovery and development time. Remember, every second counts when you're on the patent protection clock for a drug. You can only imagine how many hard-to-cure illnesses can now be beaten because we have the ability to analyze data so much faster. Years to months, months to days, days to hours. It's a game changer no matter what. Don't get too carried away with that near term. It's not a deflationary hope. It just isn't. See, you can't get carried away because rents, far more important for the CPI than, say, drug prices years out. Rents won't come down in price. Perhaps that's because we have high immigration, with maybe 500,000 people with work visas and the rest housed by state and local governments wherever they can find space. We don't know how many work permits have even been given, but obviously more people means more demand for housing. On the other hand, immigration is one of the things that keeping down wage inflation, but that's not something the consumer needs to care about. But wait, before you get too negative, wait 1 second. Have you played with Chat GPT 4o, the O standing for Omni? It has amazing capabilities in text, video, and audio. It can perceive your emotions. It can read bedtime stories with feelings, be more dramatic, more musical. Yes, it can sing the story. It can translate with correct intonation, not flat the way you'd expect from an AI bot. And it can even handle being interrupted. Come on, that's amazing. Oh, and by the way, two times faster, 50% cheaper. That's phenomenal. But how does that program that can sing a bedtime story build enough houses to push housing prices and rents lower? Is there anything in the Amazon toolkit that can put up a house quickly? Can you get one from Prime via next day? How about same day? Sure, home builder contractors can coordinate the roof with the gutters and the siding if everyone has an Apple Vision Pros building a house, but they don't. And they won't because it's $3,500 price tag. You want to Google a cheap house? It can answer a query, but it can't build a new one or even remodel an old one. You can use it to learn how to do plumbing, but don't do electrics. It's unsafe. Meta can't build a house either. I mean, Meta can tell you what your friends are up to, but how's that keep inflation down? None of the hyperscaler titans, as rich and powerful as they are, can keep insurance rates from going higher. None of them can build more used cars. They can help you find cheaper apparel, but that apparel is probably not included. Yes, they can do it, but it's not included in the CPI. You know why? Because it comes from China. It's Temu. We keep thinking that accelerated computing and generative AI will solve so many of our problems, and eventually they will. But the emphasis is on eventually. In the near term, it won't have any impact on the stuff we're worried about that's front and center, not in a time frame that matters to the Fed. Yeah, I had to reminisce about that. It's kind of like when we started TheStreet.com in 1995. We got money from this outfit called Starwave. It was founded by the late Paul Allen and led by this terrific guy, Mike Slade. Slade came to see me a few years after we had started, and he described the video ads that will run on the website. Video ads that will pay for everything. I said, video ads, genius. When can we start? The answer was, well, how about a few years from now? And when will be widely available? Who knows? You know what? We're getting a lot of who knows right now about the promise of generative AI. Who knows? So we tend to dismiss it. But if we could just get to the promised land, it could be like streaming video, huge, game changer, gigantic possibilities. Right now at this moment, everything is on the verge. But what's before the verge? Well, the answer is all sorts of inflationary numbers that may drive up interest rates, making us feel like it's too dicey a moment to invest in stocks. It feels like that moment when Starway visited thestreet.com. My response to Starway Vision was, great, that's great. How am I going to make it, though, until we get to the promised land of video and get rid of these flat banner ads? We're going to be crushed by the first outfit that disintermediates the ad agencies that love us so much. Sure enough, we got obliterated as dot-com bubble burst, and Google took over the ad game, disintermediating every advertising from no more wine and dine campaigns. No. All the predictions we made about the internet during the period turned out to be true. But it took a decade longer than the visionaries had hoped. Right now, AI is promising in the same way. But we've got this near-term inflation issue that we can't do anything about. The cars, the insurance, the homes, the apparel, the rents, these are all working against us and could cause the bond market to behave badly, making the Fed, in turn, feel like it needs to leave rates higher for longer. And that will impact stocks. I don't care what you say. So let's bring this all together. I would love to believe that AI will produce amazing gains in productivity that will help bring down inflation and bring it down hard. It could make things cheaper. It could improve the consumer's balance sheet. But it can't bring down the cost of what's currently too high. If this were a Western film, instead of just the stock market, AI would be the cavalry. Stocks would be stuck in the fort. The fort can keep lots of bad actors out, help us go higher, but it can't create the goods that are in short supply. As long as rates are high, the home builders won't put up many new homes, even though demand is off the charts. Cars and trucks, they're all dazed by the fact that we're no longer going toward the electric vehicle future everybody expected. So we can't ignore the near term and focus on recursion and its ability to reinvent drugs using NVIDIA supercomputers. We can think about how great it is that a bedtime story can be sung by a computer, perhaps in a baritone, perhaps by someone sounding like Taylor Swift. But we can't get the inflation indices that control the Fed's worldview under control, which is why you need to stick with the stocks of companies that aren't hostage to interest rates, which means you have to be wary of ultra-growth stocks. Those do poorly when rates go higher. And you don't want to get hurt by a slowing economy, like by buying the stocks of goods directly connected to housing. Otherwise, you lose money. So here's the bottom line. We got to streaming video eventually, and I think we'll create drugs faster, too. But the former took too long, and the latter, who knows? But it certainly won't be in time to save us from Wednesday's CPI report. Let's just hope it comes in cool, and it doesn't matter. Miles in Louisiana. Miles.
Hey, Jim, I have a small position in Visa and was looking to add to it. Is this a good level, and should we be concerned about rising credit card debt?
No, because it's really, that would be, a bank would be worried about the credit card debt, not Visa. People just be issuing more and more cards. I think Visa, this is a fabulous level to get in. You're down 11 from its high, but that's about all you ever seem to get when it comes to Visa. I would be a buyer. Tom in New York. Tom.
Hello, Mr. Cramer. Thank you for taking my call.
Of course, Tom. How can I help?
Quickly, Jim, I've been investing for some time without a whole lot of success. So recently, I really became fed up with buying high and selling low. So I broke down and joined the investing club.
Oh, thank you. I like that. Thank you very much.
I feel that you guys have gotten me pointed in the right direction.
Me and Jeff and Zev.
Yes, sir.
Unbelievable
yes,
team. Jeff is just incredible in this stuff. Go ahead.
Yes, you are. All of you. I'm learning to do my homework.
Okay.
But as a fledgling club member, I thought it wise to check my homework with the teacher.
Sure.
So, Jim, I have a small position in one of your Cramer faves, and I wanted to know if it's too late to increase my position. And Eaton, even though the current price is a little above my basis.
Eaton is a great stock. It trades erratically. So that means that there are these moments where it goes down like 4 or 5, and you get to buy it. You have to put in an order for if it drops 4 or 5, you can buy some for that day. Don't put it good till can just that day. And then if it falls even more than that, you can buy some more. But you got to wait because it's a crazy trader. So we got to wait for it to climb. All right, we can get excited about all these AI innovations, right? But we still can't get near-term inflation under control. So if you want to actually make money, you need to stick with the stocks and companies that aren't hostage to interest rates or a slowing economy. On Mad Money tonight, where do we stand on the gig economy stocks now that some of the key players have rallied off of their lows? I'm serving the likes of Uber and Instacart and sharing if I think the momentum could continue. Then, we've been covering the Constellation Energy story for 2 years, CEG. So with the stock rallying from 50 to over 200 today, is there more room to run? I'll give you my take. And the power of the buyback is real. I'm sharing a buyback big shot that might be worth adding to your shopping list. So stay with Cramer.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.